Hey guys, welcome back. In today's video, I'm going to talk about the Linear Regression Channel indicator. You can get it for both MT4 and MT5. Now, before I dive into all the detailed features, let me just give you a quick overview so you know exactly why this indicator is useful. You get these linear regression, this is the center line, and you get all of these using standard deviations. You can also get these future projection lines, and you can set the candle coloring based on heat map. And next you can also get these bands using ATR. So these will be important volatility bands. Whenever price breaks out of them, it means that price is overextended and will reverse soon. Now with both of these, the bands as well as the channels, you will get a lot of different types of bands that you can set. And you can also set the channels based on a single band or multiple levels. So you can set maximum 3 levels of standard deviations to get a total number of 6 bands and also the center line. And same way for future projections, you can either have a single band or you can have 3 deviations. You can set the standard deviations and the different coloring and different styles for each, so that when you set the alerts, like if you want to set them to cross at certain levels, you can know exactly where price is. And finally, you get these volume spikes or these high volatility spikes. So you know which candles are important, because when a particularly high volume candle, it crosses outside the band, then you know that that is an overextended state and it will reverse soon. So based on your style of trading, you can set these important values and whether or not to use these straight channels or to use those curved bands. That will really depend on your style of trading. And these future projection lines, these will overall help you decide which way price is going. And when you get these stars, like the yellow stars, those are high volume and these one are high volatility. When you see these in overextended ranges, then the sudden rise will almost always give the sudden drop back, because price will always come back to this center line. That is why these bands are much more important compared to moving averages or even Bollinger Bands, because these react with price and these are non-lagging and they follow the trend, which is why these give you very quick signals without any lag. We look for stretched markets, and after that price goes back to the mean. So mean revision, where price retraces back. And the overall slope of this center line is just as important. Like if we were also using the bands, the central bands would be important areas where price will always return back in an overextended state, return back, go overextended, and so on. So these are excellent for these kinds of swing trading. And if you are in a trending market, then these are also excellent in figuring out when a market is trending based on these center slopes. And if you are interested, then I would suggest that you take a look at these important settings where there is this cheat sheet, depending on the type of trading that you do. If you are looking for those really high swings on daily or hour 4 charts, or if you are intraday trading, or if you're scalping, or just following along the trend. So all of these settings, these will help you immensely. Now let's go over the settings one by one so that you can set these values. These bands, these are drawn using buffer values. So if you are interested in using this indicator with your own expert advisors or your other indicators, then these values you can get using the buffer values. And also all of these arrows, these are also set using buffers. But these projection channels and also these regression channels, these straight line channels, these are actually drawn using objects, so you won't get the buffer values for that. So going over the settings, you can set this prefix. If you're using other indicators on the chart, just make sure that this is unique, because as the price keeps progressing, these lines, they will constantly get redrawn, because these need to react to immediate price, and it will use this prefix to draw these objects, and it will calculate the curved bands using the max past bars. And shift is the current price. This current bar, this is taken into account. So this is where these bands will start. Now if you want to see the curved bands or hide them, this true or false, you can set that. And most of the time this RMA and true ATR, these will almost look the same. So let me just set the ATR and then these bands will only shift by just a little amount. And that's because we are on euro dollar. In Forex, both of these are almost the same. But in stocks and certain indices where price jumps from a particular price and end of day it opens at a different price, these bands, these RMA and ATR, these will be different. The difference is that the RMA of high and low, this will measure the candle ranges. So going back to the blog post, I won't go into too much detail, but basically the comparison is that this mode, it will look for strictly the intra-bar range, high minus low, and it will smooth those bands out. And what it actually ignores is where the previous candle had closed. So when price in certain stocks, it jumps from one level suddenly to another. So for that, I would suggest that you use the true ATR because it will take the high and the low, and it will also consider the previous close of the market, which is why those bands, those will be much more smoother. And standard deviation. So for standard deviation bands, you should set the deviation a lot low, like maybe 1.5 or something like 1, because those bands will stretch out even more. And these standard deviation bands, these will contract when price is in a low volatility area and it's making these tight ranges. These bands will come together and as price spaces out. So just like Bollinger Bands, these will space out that much more. Knowing the true overextended areas of market, so these standard deviation bands, these are very much useful for that. And as you can see, these small dots, these are when price goes outside of these bands and it shows these overextended states. That's when you get these dots, and these lower dots, these are for overextended states when price is bearish. And these stars, so these are the high volatility stars and these are high volume stars. So instead, if you want to turn these off, then you can also use the overall heat map of the candle. So if the candle mode is volume weighted colored bars, in that case these red candles and these green candles, so these are bullish high volume, these are bearish high volume, where price has already climaxed. And if you want those medium volume candles, so blue is bullish and these yellow, these are bearish medium volume candles, and you can set those ranges right here. So this spike threshold, this is for these actual yellow dots, these dots. And same way for volatility, this high volatility threshold, this is for these dots. And in order to get the heat map, you can set the high volume threshold and low volume threshold right here. And this arrow distance multiplier, this is just to space out these small dots away from the high and low of these candles. And if you don't want the volume weighted, a better thing is this curve deviation heat map. So when you set that, you will see these candles take the color of whether the price is in bullish or bearish mode. So all of these blue candles, these indicate highly bullish market, and green candles, this is a medium bullish market, and all of these red candles, this is highly bearish, and these orange candles, these are medium. And these white candles, these are somewhere in when price is in the middle of bullish and bearish. So you can set all of those colors based on what you need in your heat map. If you are trading and if you are looking for the trends or those really long swings, in that case I would suggest you use these bullish and bearish heat map candles. But if you are more interested in volume, like volume weighted bars, then set this one. And we already talked about these high and low bands. So all of these deviations, you can set the band length and the deviation. So this will affect how far these bands are actually drawn. And this band length, this affects this center band and how that is drawn. We already talked about the heat map. And next up, we can either show or hide those straight channels. These are the actual important regression channels. So if you want only one channel, then set it to single band. So it will just show you this. And let me hide those curved bands. And same way, if you want the future projection, just to have a single band. And then you let price run. But if you are looking for those overextended high and low periods, in that case it's better to have multiple channels. So you can set that to multiple level bands. These actually will help you with this setting the alerts. So these will help you figure out those overextended areas much better. And each band you can set the colors and the styles of each of these. Now in MetaTrader 4, the problem is that if you set the channel width to more than 1, then all of these lines, these will always be straight lines. But with MetaTrader 5, if you set the channel width to higher than 1, so in MetaTrader 5, those dashed or dotted styles will matter. But in MetaTrader 4, if your band width is more than 1, then these dashed or dotted bands, that won't matter. It will always be a straight solid line. And this is the channel length. So for both, it's 150. So that's the period that it takes to draw these channels. And you can also set the deviation. This will mean that if you increase it, the bands will space out even more. So price will have to work that much harder to cross those outer bands, and you will get the really overbought and oversold prices when you are setting the alerts. And same way for future projection, the actual projection length, that's only 50 bars. So this is that much more reactive to immediate price, and you can set the higher time frame for projection. So right now I'm on M15, and if I set it to 1 hour or 4 hours, then that will take those higher time frames into account. By default, it will just keep it at current. And if you are on M15 and from this drop down you select M5 or 1 minute, in that case it will just use your current by default, because right here you need higher time frames. Just be careful of that. And projection labels, whether you want to see these labels or not, you can set that to true or false. Same way you can set the channel labels on or off. So these labels are just important to figure out, like this is C1 and the next one C2, C3. Let me hide these future projection ones so it's easier to see. And the upper bands, these will be C1, C2, C3. Lower will be -1, -2, -3. And these channel numbers are actually important when you set the alerts. So if I want an alert every time price crosses this one outermost band, which is C3, so I just need to set 3, -3. So whenever price crosses 3 and lower -3, I will get an alert. So if I want an alert when price crosses it and goes outside, set it to cross up, and price crosses and goes below it, set it to cross down. And if I want other channels also, like 3, and if I want 1 and 2, but I don't want -1 and -2, so I just set it to this. So it will alert me when those crosses happen. And same way for future channels, you can set the comma separated values and the alert shift. By default, it is set to 1, because if a bar is still forming, price might go up and come back down multiple times, which is why it's better to use the closed price. You can get different kinds of alerts. You can get email push notifications. You can also have alerts in files in case if you want to use those alerts in your own expert advisor or something. You can use the show debug values to see all the buffer values for the start and debug for bars. And this is the refresh after ticks. So this is just for performance. Like if you set it to 50, price will change these bands every 50 ticks or so. So if you set it to something like 1, that will happen every single tick. So price will refresh every single tick. So if for performance reasons, if you're not interested in every single tick, just set that to 10 or 20. I think I've covered all these settings. Now let me just go back to the blog post. So just take a look at this. It will explain to you exactly how you can use these regression lines, what the differences are between each of those modes, and when to use the standard deviation, and when to use the ATR channels, and how the colors of the heat map are set. And these straight line channels, these are the actual regression channels, and these future projection channels. So how to use those in your trading, when to use these breakout signals, and when to use volume spikes. And this will be the most important part of the blog post. So while you are figuring out all the values, it will show you the best values for the different kinds of trading styles. And the settings reference. This is for each and every setting which is used and what that setting does. And also check out the free demo version in my Telegram channel. So demo will be free for this whole month till the end of the month. And in my next video coming up next week, I will be releasing 3 indicators as a pack in which it will take one candle of a higher time frame. So these lines will be drawn based on that higher time frame candle. Price goes out, comes back in, or it will also look for fair value gaps. So price jumps out, creates these fair values and comes down. And the final indicator, it is the retracement where price goes out, retraces back in, and it uses these important areas for retracement. Goes out, comes back in, retraces, and goes out. My next video will be based on all these 3 indicators and in which kinds of scenarios you can use this. So check it out next week. So thanks so much for watching, guys, and I really hope that you enjoy using these regression channels. Let me know what you think in the comments below, and I'll see you soon. Thanks, guys. Thanks for watching.